Nichedge Academy, Indices or Index Fund. Disclaimer: the information provided by Nichedge Academy is protected by copyright and is intended for educational and informational purposes only. May not be reproduced, distributed, or used in any manner without the express written permission of Nichedge Academy. Please at your own time read through the disclaimer at your own discretion. Education, research, resources, source, tools, and training. We aim to educate via video format on the topic as we go through this presentation. We have referenced articles for research purposes from other reputable publishers where appropriate to assist the teaching of the topic. The articles are sourced from the Investopedia with titles and links attached at the end of the presentation. We use Scholarly, an AI-powered article summarizer tool to identify key information such as study participants, data analysis, main findings, and limitations. This can reduce research and study time by over 70%. The original PDF slides and Word document article summaries from Scholarly shall be made available for further studying along with the original articles as free resources. All further social media post sharing enabled by Scholarly may have additional Wikipedia links embedded for further educational reading and research. Coolbot AI software is used to paraphrase definitions on the bespoke topics. Guide and train yourself on the topic by alternative options like the articles, PDF slides, video, Word document, or a combination of all free downloadable resources. What are index funds? An index fund is a portfolio of stocks or bonds that is intended to replicate the content and performance of a financial market index. Low-cost index funds are available in a variety of mutual and exchange-traded fund formats. They have reduced expenses and fees compared to actively managed funds. Index funds are passive investments that use long-term approach without actively selecting securities or timing the market. Index funds should match the market's risk and return on the assumption that the market would outperform any single investment over time. What is an index? Using a uniform criterion approach, an index calculates the price performance of a portfolio of assets. In financial markets, indexes are frequently used as benchmarks against which to compare the performance of investments. The S&P 500 and Dow Jones Industrial Average are two of the most prominent indexes in US markets. As a low-cost method of imitating the results of well-known indices like the Dow Jones Industrial Average and the S&P 500 Index, passive index investing has gained popularity. Benchmarking your investing plan against the relevant index is critical for understanding portfolio performance. What is an index fund? Index funds are mutual funds or exchange-traded funds whose portfolios are designed to replicate the performance of a specific index. Index funds have historically outperformed other forms of mutual funds. Some advantages of index funds are their low cost, low risk due to their great degree of diversification and tax advantages. They produce less taxable income. Indexing. Market indexes are significant benchmarks for measuring the returns on various assets, including the stock market. Index investing has grown in popularity over the years, with this passive technique outperforming more active investments over time, particularly after accounting for fees and taxes. The only ways to own an index are through index funds and ETFs, index derivatives, or self-indexing. What benefits does indexing provide? Research shows that over the long run, passive indexing strategies tend to outperform their active counterparts. What is a tracker fund? Tracker funds are pooled investments that track a wide market index or subset of it. They are also known as index funds. Tracking functions drive index fund management, and tracker funds aim to duplicate the market index performance. Passively managed tracker funds might incorporate indices that are tailored to specific market sectors, segments, or themes. Market innovation has resulted in the possibility of customized tracker funds, which allow for more targeted investing. Investors can save money by using customized tracking funds and an index replication technique. Article title and links. What are index funds and how do they work? Index fund. Investing in index funds. What you need to know. Is it possible to invest in an index? The lowdown on index funds. Tracker fund. What it is, how it works, examples. Vanguard's John Bogle on starting the first index fund.